Hi, this is Hille on Sunday the 12th of May 2013 with another trade mentoring video. Now I'm feeling great right now because I've had a very good trading week, but as you know from previous emails, sometimes I don't have a great trading week, and I'm open about when I make mistakes and when I take losses. But also you've got to celebrate your successes, and you also have to analyze your successes to see what you did right, so that you can reproduce that in future trades. And actually more important even than that is when you have losing trades and really bad trades, you need to analyze those as well to see where you went wrong so that you do not replicate that. So last week was in fact the best week of the trading year for me, and last Friday the 10th of May was the best trading day I've had in the last 959 days. So I went back on my spreadsheet and saw when I had a better day, and the last day I had that was better than Friday was way back on the 25th of September 2010. So last Friday, the 10th, I was up almost 3.5%, and as you know, I only take trades generally between 1/4 and 1/2% of total equity. To be up pretty much 3.5% of total equity on one trading day is a big deal. So let's talk about the trades. And I also made a mistake this week and left money on the table, or didn't take a trade that I should have, and I'm going to talk about that as well. So you already know my two most profitable positions this week because I have covered them in previous sessions. The first one is Aussie USD. Now I sent this out on via email on the 22nd of April. That's before I'd started recording these videos. So you will have got this on the 22nd of April, and this is Aussie USD daily chart, and you can see 22nd of April. And what I said was that price is in this range. And it's not only in a range, it's been in this range since July 2012. So it's been in a very long and very tight range. The point I made in that email was that when price breaks out of a long range, the longer price has been in the range, the more powerful the breakout is likely to be. So I have been looking for a breakout out of this range for quite some time. Okay, let's have a look at the current chart. And here we have Aussie USD, the current chart. And as you can see, this is the same range we identified in the previous chart, but now we have cleanly broken out of the range. Let's lift this up a little bit. See if I will bring that down a little bit. And then we can see I'm trying to bring the months in so you can see those as well. There you go. So you can clearly see that we have now broken cleanly out of this range. If it had been a break up through the top of the range, I would have been looking for a long trade. As it was, it broke down through the bottom of the range, and obviously I was looking for and took a short trade. And we've broken out beautifully. We're in the second day now of the breakout. And another thing I mentioned on that video was that when you have a range, a clearly defined range, and price has been within that range for a considerable length of time, a reasonable target is the same range will play itself out in terms of the move down before there's major support and resistance, or that's often the case, not always of course. So therefore I've drawn this other line in, which is now a price target for me, which is the same size range as was contained in the range. So certainly we have a potential to go down to 97.60-ish, and also what I like about that is that we have a clear point of what will be support underneath this candle here, and if we take profit in and around here, or at least look to lock in some profit in and around this level, then we're not going to run into the risk of hitting support and bouncing off. So another couple of things to say about this. Right now we're at this minor support right here. I'll be looking forward to breaking down below the low of Friday's candle. And also I like to see what's happened recently, so I'm going back to the last time that we broke down out of this level and we had this very nice run down, multiple candles down, the occasional retracement right down to these lows. So I'm going to be expecting this to continue on down in the week. It is possible, however, that price will come back up and test this break. It's unlikely because it's 160 points away, and that would be a very big move, and the news out of Australia has been bad, and obviously US dollar has broken up strongly against the yen, which we'll be looking at shortly. So it's possible it'll come back and test that major line of support and resistance. My expectation is not, but also we're quite well extended from that, so I wouldn't be surprised if there was some sort of pullback before we continued on down. And Monday is often a day that I don't like, and it often doesn't do what you'd expect, so I'm not going to jump in and take more on Monday. I'm going to be very patient and wait to see what happens, see if there's any consolidation. If there is a consolidation or a slight retracement, then I may look to get short using moving average, using a moving average sell zone. Okay, so that is Aussie USD. Now this trade you know about because I did a video about it 3 days ago, and this is also one of the reasons why I had such a good Friday. In fact, I had a good Wednesday, Thursday, and Friday. This is the Nikkei index, which I am really long in a significant position, and so you may want to go back and watch that video. I'm not going to explain it all again. But one of the key points I want to make, which is I think an interesting point, is that I have a significant and pretty large position now in the Nikkei, and right here where price is, we are well above the moving averages, which is where I expect it to retrace to. So therefore I'm in the interesting position of holding a significant position, expecting that price will come back. So it's actually my expectation that price will retrace at some stage in the next week or two back into this moving average buy zone, into this between the 10 and the 30 period moving average. So therefore the question you might ask is, if I know it's likely to retrace and the probability is that I'm going to lose money on my current position, which I expect to do incidentally, not lose money overall, but I expect my profits to be reduced. Remember, I got in on this candle here. So my stop is now going to be, well, I'm not moving my stop, actually it's still down in this, below that, the low of that candle. So it's possible I could lose money, but it's unlikely, because of course unless price completely capitulates in the next couple of days, these moving average lines will go up too. But the question is, considering that I expect it's more likely now that price will come back or at least go sideways while the moving averages catch up, why don't I sell my position and wait for a better opportunity? And the reason is simply this, and it's something I learnt from Jesse Livermore in his wonderful book Reminiscences of a Stock Operator. I am not smart enough to pick the place at which it will turn round. So even if there is a retracement, it may not come down into this 10 and 30 period moving average. It may just come down into the bottom of this candle and go up again. And I do not want to miss out on what is clearly one of the best, if not the best, trends of the year. So I'm not going to take my profit, even though there's more likely than not that I'm going to lose some of the profit that I hold by holding this position. Okay, another trade that I did well on last week, and we'll get onto the mistake shortly, is Aussie Pound. Now I've been short Aussie Pound since, well, here's the daily chart. I've been short Aussie Pounds, and I sent an email about this some time ago, since this candle here. And the reason I did is, once again, we've got a moving average. I'm using a 7 and 12 period moving average. Every time it comes into this zone, it becomes a moving average sell zone. So it came into the moving average sell zone, it broke down below the low of that candle, and I got short. So I'm short all through here, and obviously the last 3 days have been very profitable. In fact, the last 5 days have been. Again, it wouldn't surprise me for... Oh, there was another entry point there. I missed that one. I could have added to my position by going in there, but I didn't. Again, quite likely that we're going to come back into this moving average sell zone. And I am short. Okay, now the trade I did not do so well on. Well, in fact, the trade I missed. Dollar yen. Thinking about it. Okay, so dollar yen, as I'm sure you know, unless you've had your head buried in the sand, broke above 100 for the first time in a very long time, and we had a test at 100 here and failed, a test here and failed. The third time when it broke through, as soon as it broke through, it took off like a thunderbolt and went up from 100 to 101.57 as it closed on Friday. So I knew even before this happened that there would be a lot of buy stops above 100. In hindsight, it was a dead easy trade to take. It's part of the reason why Aussie USD has fallen, because of the dollar strength, which sort of got ignited as soon as the dollar broke above here. I should have been on this. I should have been aware of it. It was a very low risk trade. If you could have should have put a stop in at 100.001 or 100.01 with a relatively tight stop. And if we go down to the hourly chart, we'll see just how it took off once it hit 100. There, it didn't even pause for breath. As soon as it got through to 100, it just exploded higher and has continued on up. So that's a trade that I missed, and I should have been aware of it. And it's now I've done my weekly trading review, as I do every weekend, saying what mistakes I made, what things I did well, what things I did poorly, how many trades did I take, how many profitable, unprofitable, etc. And I have given myself a new rule, essentially, to be watching when these kind of levels go. Actually, that takes us back a little bit to Aussie USD. Of course, we're now above the major level, just slightly above. I should have mentioned this, my apologies for not, of 1.000. Now this didn't happen in the same way, obviously, that dollar yen did, partly because this level's been broken many times in the last couple of years, whereas dollar yen hasn't. We've broken down below the parity figure with Aussie USD of 1.0000. Big round numbers are very important as support and resistance. I'm expecting that to get broken sometime next week, but again, we're above it. We've found support and resistance there, just like we did here and here, which is the reason why there was support resistance, which is another reason why I need to be hesitant in the couple of days of next week and just wait patiently to see what occurs. But if we break down below the low, which is 95.59, then I'm going to be more confident to go short, especially if it happens on Tuesday rather than Monday, because Monday is a day where there is thin trading, and often targets can get triggered in a false way on a Monday. So if it breaks down there below there on a Tuesday, I will look at the possibility of taking a short position, bearing in mind everything else that's going on. Okay, that's all from me today. If you see this video on the weekend, I encourage you again to do a weekend analysis of what's happening in all of the currencies you follow. Make sure you have a look at the long-term chart, the weekly and the monthly. And happy trading. Hope you have a wonderful week ahead. Part of my next week's trading is to make sure I hold on to the gains that I've made, because oftentimes when you make large gains, you can get over enthusiastic, you can add positions, and you can not be careful enough about protecting the profits you've got. It's certainly been the case with me, because my natural instinct is to be aggressive as a trader. So one of my keys for next week is not to give back much, if any, of the profits that I've made. I don't mind a bit of a retracement, of course, because I'm a trend trader. I'm happy to stay with the trend, but I don't want to be adding big positions and then seeing all of those lovely gains that I made last week, and especially on Friday, being given back to the market. Happy trading. Have a wonderful week ahead. Talk soon.